Okay guys, Sunday the 20th of August and we are on the Australian dollar, US dollar. So we're going to have a quick recap of the market from last week in relation to our Sunday analysis. And then we're going to have a look at the market for the trading week ahead. Now just quickly, I'll be going over this week and also next week. I'm basically going on holiday on the 31st of August. I am going to try and continue with the review videos whilst I'm away. I'm going to be in the Himalayas, so it just completely depends on internet connection whilst I am there. I'm also going to be making a vlog of the trip, and I will post that up later in the year once I've got back and I get a chance to edit the video. Okay, so last week we were making the pullback on Australian dollar, US dollar. We had a level of support right here. We had a level of support right here. And then we had the key levels, which for me start around about that 7,750 area. Key level identified by previous structure, really from August of last year all the way forward, creating that level of resistance that we broke above. Now last week the market pulled down into this first level of support. And then on the Wednesday we had a very, very strong bullish movement. Now the bullish movement, it came off of our level of support. However, it was a lot stronger than I was expecting. And then we pressed up. All I went over with subscribers after this day, well, the first one was we had a level of resistance up into these levels here. And the market came up, it tagged the resistance level, it then made a bearish movement. Now, this is worth going over. So we had the bearish movement here. People are looking at this as a pin bar, so looking at it as a pullback, the market trying to press higher, failing. You can see it breaks the lows here. It's trying to trigger in people looking for that move down to start once again. Now, what I went over with subscribers was the way this market pulled back, there was the potential for a bullish movement rather than further bearish movement. There's a couple of different ways that this was identified. So the first one was that this was a very strong bullish candle. It's a lot stronger than any of these downward movements. It's giving you the clue that, there has been a strong injection of money. So there are buyers interested in this market. We've had the break above key resistance. We've pulled back. There's nothing to say that this is not a level where buyers are going to look for continuation. So that was the first clue. The second clue was the candle on Thursday itself. Lots of people are just looking at this as a bearish candle. However, there was a couple of different ways to identify that the bulls may still be in control. And the first one was this candle here on Tuesday, the spike up. It spiked up into round about, let's say, 877. So round about here. Now, when this market broke up like this, or when it breaks up, when you see a movement on any time frame, what you tend to see is retests of some sort of structure. Now this was the first level of structure for me, and then there was another one down here, taking into account the spike down here, the spike down here, the spike down here, the close, the open, and the close here. So this was a level of structure. This spike up right here was a little clue that potentially there was a level of structure sitting here also. And then on the Thursday, the market pulls back. Although it's bearish, it has touched this level and the bulls have stepped back in. It has failed to break down below the first area of structure that I would expect to be retested if we were going to continue the bullish movement. So as soon as we've seen it holding at this level here, as soon as I've seen it popping up and closing above this level, I knew that there was the potential there for another bullish rally. It's good to be able to look at things like that on the chart, identify things like that on the chart. And there's a lot more going on a chart than just, pin bars, engulfing candles, doji candles, things like that. The market is always trying to give you clues as to what it is looking to do. So, coming into next week, what are we looking at? Well, in fact, let's just clear this chart off quickly. First of all, we still have the key levels of support. Here, you can actually argue to bring this one down now into round about 7, 8, 10 would be this level right here. Looking at this, actually, I'm going to bring this back up. I prefer this still sitting at 7,820. We did have a little spike down here. However, it lines up better with structure like this. So this is a level of support. It continues to be a level of support. We still have the level down below also. So nothing has changed in that regard, with the key levels coming back in at 7,750. You know, we've gone over that a number of times in a number of videos. Now, we've made this strong bullish run up. However, for me, we can still look for the potential rejection up at these levels up here. The reason being, we've broken up above, first of all, key levels of resistance. We've moved into areas we haven't traded in since all the way back in May of 2015. So really, the most recent structure is worthwhile using for your support and resistance levels, because we haven't traded here for such a long time. We've already created this level of structure. It's giving us the clues that we want. Now, obviously, let's have a look. So obviously we have the highs. Key level of resistance. Now, we could be seeing a number of things. We could be seeing that break above and the pullback before we get the continuation. Or we could also be seeing the market pulling back, the bulls stepping in before we see further failure, and the market then trying to break down toward those key levels of support. Next week, for me, is a little bit more neutral until we see further evidence. You know, we had the pullback on the Thursday from resistance levels, and then going into the Friday, we did have the bullish movement. But, you know, the key thing for me on this one is it hasn't broken up above Thursday's highs. It hasn't really gone anywhere. We've had the bulls step back in, but they haven't really done anything as yet. So, looking up above, let's have a look for a couple of key levels here. We have one, really it starts down towards these levels here. So what's the low here? We're about 7,937. Let's just bring it down a little bit. Around about here. It is a fairly big level. You could take one, you could take it up into, let's have a look. I'm just looking at the previous structure. It's really all the way up into around about 65 to 70, in all honesty. We're looking at the spike down on the 25th, the spike on the 24th, sorry, the spike up and then rejection back down, the spike up and then rejection back down. This is, or it remains key resistance. Now, if we did start breaking up above there, we do have structure right here. And let's just get rid of those arrows if we can. A little bit of an annoying feature of Pro Real Time. It can be very difficult to select certain items. Okay, so 1, 2, these are both good levels of resistance. It's worthwhile looking at both for potential weakness in the market, especially if we continue to fail at these levels. If we do, you know, it's suggesting a move back down toward the key levels of support down below. One of the main ways, or the main things I am looking at on this market now, is this level of support and resistance here. Really, 903. It does come all the way down toward 875. Let's bring it down. This is almost the pivot point. So the pivot point for this level of structure, whilst above this level, the market is looking more bullish. If we break it back down below it, it's starting to look more bearish once again. So this whole area here, it's around about the round number 7,900, a little bit higher, 7,905 to 7,910, 7,875. This one here is the pivot level for me. You know, it's not an actual pivot level. I'm just using that as the explanation. Whilst up above this level, the market is looking more bullish. If we start to break down below, it's giving you the clue that the bears are once again trying to force this market down toward key structure at 7,750 and lower. Up above, we have that level of resistance. continue watching here coming into next week. If we did break up above, it's worthwhile looking for the bounces up toward 7,990 and 8,000, which again is another level of resistance. If we're breaking down below this level, we do have the support. But certainly if we start breaking below these levels now, it is suggesting a stronger correction coming into the Australian dollar. So that's pretty much everything for next week. I'm fairly neutral on this market now until we get a little bit more evidence. We have been looking for that move down over the last couple of weeks, 2-3 weeks. Now that we've had that strong reaction, now that we're sitting above what I'm calling the pivot point, I'm a little bit more neutral. You're really using this as a little bit of a guide. Whilst above here, especially if we start coming back and continue to hold at this level now, it's giving you that clue that the bulls are looking to step back in and continue this move up. If we start to fail here, I'd expect at least 820 to be tested again. As soon as we start to fail there, it's really suggesting the stronger correction. Okay, so that is everything for this week on Australian dollar, US dollar, guys. As always, I hope that was helpful, and I hope you all have a good trading week next week. I'm James Orr, and thank you.